Okay, guys, it is February 16th, and we're just going to do a quick run through of my weekly assessment. Just so you guys understand what I do every week is I go through and I make sure that my thesis for the year is still on track and that there isn't some news or events or things that are changing it. And I throw in the data that we get to adjust for what we need. Um, okay, you guys can see the PowerPoint, right? All right, so you guys know I think 2024. These are all just repeated slides that I've talked to you guys about. Yep, zoom out, right? Everything. This is dollar cost investing. Why we go long term. What I'm looking for after a 2 year breakout. This is what you see. That's what I think we're gonna get. Realize the monthly seasonality, right? January and February are not great. Presidential primary elections usually go sideways. You can see the first quarter one is not great for the election year. It's just kind of we do nothing. We just go sideways, right? Um, and this is all the hard data that we know what happens when historically what's going to happen. And you remember last week I said, hey, what could be a potential catalyst? They upped this to 3.2, but I said, hey guys, if we go below this, we could get a nice push out. If we go above this, we could get a nice push down, right? Well, what happened? I said, hey, if inflation comes in hot, we probably are going to go sideways. If it comes in cool, we'll probably bounce up. Well, here's the data, right? So the data was 0.03. You want to use hard data. And so, we went from we're up over zero point 0.2, so we were a little hot, right? So what that means is, well, shoot, the Feds are going to have to hold the rates longer, higher for longer, like he's been saying. So what happened was the odds of a rate cut in March went down. It was at 70, I think 71% when this was coming out. It dropped to like 50. The market started going down and then it rebounded and it started coming back up. And now, if you look at it, the odds are actually higher. You see this 78%. So now they're saying in March there's a 78% chance. So what we have to decide is why. Why do you guys think that is? Why do you think after inflation came in high that people are actually thinking that it's going to be cut even more? Does anybody have any idea? What's the name of this publication? T. Jules, this is just something that I put together. Um, I put this together every week. Just this is how I keep track of me. Um, yeah, PPI was opposite. PPI was lower, right? There's quite a few things too, and you can see it like whoever said it, I forgot. 007. January showing a little bit lower. Um, we we also when you start breaking down and seeing what's what, you can see housing down here was point 4, point 0.5. It's like that should be coming in, because this one's the biggest laggard, right? So there's a lot of people arguing that uh, exactly what 007 is saying, that January is going to be how do I say it, a potential catalyst, I guess is the way you worded it, for it to come in. So everybody's like, well, we still think they're going to cut, right? So we have to decide, well, okay, it wasn't the potential blowout to push us up. So do we need to wait till next month? You know what I mean? Do we need to wait till then? Are people going to start buying now? And this is what you have to decide. You know, where are we? Where are we in this process? In my opinion, we are in this range. And what I mean by that, this is months before the first cut, right? So if they are going to cut in March, we're right here. Does that make sense? You know, if it's longer, it'll be over here. But for me, I like the idea of trying to play this and then setting up for this first cut. All right. And to be honest with you, I'm actually setting up on real estate as well. I am getting prepared to play real estate 6 to 12 months out. Like right now, I'm preparing for it. One of the things that I do want you to notice is tech. Tech, as soon as it cuts, it pops, and then it does extremely well 6 to 12 months out as well. Okay. Now, if you look at April, May, and July, if we do not get a push and we do show weakness in the first quarter, I'm going to be using that weakness to build positions out past the dates of April, May. You see how all the way to all the way to July does extremely well. These are the months where I want to really be making a lot of money. Okay, any questions on this? Because what I'm going to do now is, I think it's important, at least for me, to understand the argument for the other side. Navy Nick says JP likely won't cut rates till June. Yeah, you can, Cam. I put all this stuff in. The admins here at DPL have access to all this stuff, so they can post it. So anyway, all right. So here, guys, I'm gonna go through, and this isn't to scare you. It's just to let you know the opposite side. It's, to me, you need to. Anything in life, I don't care what you are, if you're religious, if you're Democrat, if you're Republican, if you're Russian, if you're, Ukrainian, whatever, you need to be able to listen to the other side and just use data to decide where the truth is, right? And so I'm going to pitch to you the bear argument. And this bear argument has been being said all of 2023, and I want you guys to understand what it means that I've been calling for a bull during all of this, because when all this is said and done, what I'm saying is going to happen really hasn't ever happened before in the history of the market. And so why in the world would I be doing that? Like, why would I be saying, 100% of the time this happens, but this one time I think it's not going to happen, right? So let's run through it just real quick. All right. How many of you guys have heard of the yield curve inversion? Using the 10-year, this is probably the most common thing that I've heard. Using the 10-year, 1-year bond yields. There have been 12 inversions since the 1950s, and every single time a recession came, average lag time of 14 months with ranges of 25 and 7. We're about 17 months now. Soft landing was commonly discussed during the 90-91, 2001, 2007, and 9 recessions. It was a common thing. So, this is something that, and again, 99% of people on Twitter are idiots, but the Twitter sphere, pumps this thing out like crazy. So, you can go back and you can look at them and you can say, oh, yeah, oh, wow, that they are correct, right? This is all true. Well, what about net savings as a percent of gross national income? Well, we're going negative. Anytime we've gone negative, it's led to recession. See right here? Recession. Right? Yeah. They are right. This is all true. Statistically, they are exactly right. The M2 money supply versus GDP. When GDP outpaces the M2 money supply, a recession often occurs. And so you could see anytime that we have these dips, right, that's where a recession is occurring. Yeah, that one's true too. What about the credit card delinquency rates? I mean, how many times have you guys heard this? Credit card delinquency rates going through the roof, and they're true. They're 100% right. You can see, look, it's like credit card delinquency rate. We're just going straight up, right? All of these things are 100% true. I mean, true, 100% true, not true. There's a bunch of other reasons. You got the high base effect. If you don't know what the high base effect is, you're comparing it to the previous, if Michael Jordan went out and scored 50 points one game and then 55 points the next game, they're like, well, shoot, he's going to go down after that, right? Well, shoot, yeah, you're comparing against 50 and 55. Probably so. Does that really mean much? Not really. So, yeah, could we enter a technical recession and it not really be that bad? Absolutely. That could be true, high base effect. We've got the tightening, of the feds. They're running off the balance sheet, blah, blah, blah. You got the banking crisis. You got commercial real estate that's going to crash and everybody's going to be screwed. Do you guys remember when I bought VNO and there was somebody literally in this room that was like, no way I would ever touch this thing. Oh, real estate, blah, blah, blah. And I get a double, triple out of that thing. And it's like, yeah, there's a reason that I do things that other people don't do. And that's because I want to make money. Bank crisis also talks about the hold to maturity securities, right? Same thing that happened with, SVB. It could get worse. And then here's the thing that nobody can control, right? Global tensions, war. I don't know. Do you guys know what's going on in the Red Sea? Put a 3 in chat if you do not know what's going on in the Red Sea. And then even if we don't get into like a full-fledged war, we could and are in an economic war with China where we're like, hey, you can't have this, you can't have that, you can't have this, and everybody goes back and forth and tries to saddle, what's the term? Shake their saber rattle. There you go. So you guys don't know. So here I'll draw it out. Let's see. And again, I'm not a professional that understands this stuff completely, but I did sleep at a Holiday Inn last night. So hey, you know what? I can talk about it. All right. So Red Sea, right? Okay. So Yemen's over here, and 70% of all goods are transported through this area. And if you can't go through this area, you've got Africa down here, right? That you actually have to go around Africa to get to all these other places. Well, this, adds a couple weeks, week to 2 weeks, where if we can't get through the Red Sea, what's going to happen? Well, everybody's going to have to pay higher shipping costs. Well, higher shipping costs is going to get paid for through us, right? The people that are buying the products. That causes inflation. And so over the weekend, did you guys see that we were, our good, strong president decided, hey, let's show some force, and we sent some bombs into Yemen. And we're like, hey, let's blow some people up. Because we don't like these guys because they are attacking ships coming through the Red Sea. And they're doing it in protest of Gaza and Israel, right? They're saying if Israel continues to fight against Gaza and kill, again, I'm putting in quotations, I'm not taking a side here, the innocent people in Gaza, then we are going to mess up the global trade market, and that could cause inflation, right? So there's all these things that could cause inflation to resurface, um, and cause some problems for everyone involved, right? Yeah, they are. They're supported by Iran, right? So I don't want to get into the yeah, right, Daryl, to the political side of it. But just know, there's an issue going on with that, and I spoke with a person that I trust a lot, and to be honest with you, the Red Sea thing shouldn't affect Americans too much. It may have a small impact, but it's more so for Europe. It's really bad for them. And the ironic thing about it is Yemen is only attacking certain ships. They're letting China through. So China's like, hey, we're China's being Switzerland. We're like, we're not taking any side. Just let our ships through, please, right? So anyway, the point of all this is there's always an opportunity for global tensions to thwart something. And again, I'm not getting political here, but what I want you guys to think about is during Trump's 4-year term, he's the only president that hadn't started a war, and there hasn't been these global tensions with war during his presidency. He's the only one. They've always existed. But what Trump did give us was, hey, we're going to put tariffs on China. We're going to tariff China to death, right? So it created other obstacles, but this is always here. Just know that. It's always there. Okay. So the just I don't know, like for me, show me a time where we got into a war that was bad for the market. I don't think this is a big deal. Anyway, I've got rebuttals to all of these, and the important thing to remember during all this is, yeah, we want to go through and we want to be able to see, hey, yes, this is true. Yes, this is true. Yes, this is true. But, and then put out your rebuttal, like, people were saying the M2 money supply is going down, right? And I told you guys last year, yeah, the M2 money supply is going down, but we still haven't hit trend. We've got $4 trillion still to spend, right? And so every time that you see an argument, yeah, credit card delinquencies are going up, but they still aren't even above where they were, before the pandemic. We're just right back to where we were. Is that panic time? They're nowhere near where they were, during these recessions, right? And so you can go through here and you can kind of rebuttal all of these things, and that's what makes me to remain a bull, right? So what I believe runs the market is valuations. And what people are always trying to do with their money is find the best place to put it for the biggest return. So everybody that is a bear, where do you think they're putting their money? If you're a bear and you think the market's going to go down, where would you be putting your money? Let me catch up. See, support 100%. But war is inflation. There, yeah, right. I heard the Panama Canal. Yeah, I did too, Blazer. Panama Canal needs water. Demand totally. Tom, I apologize if I said something totally political. I wasn't meaning to. You mean okay? Gold bonds. Yeah, right. I mean, we can get 4 or 5% on bonds, right? And so, yeah, CDs, bonds. You'd put it in treasuries. That's where you're going to put your money because it's guaranteed. You've got a nice guaranteed 4 to 5% rate. Um, and so it's like you see this high demand of those, and that's because many people are still thinking 2024 is going to be a recessionary year. But for me, I got I got to be honest with you. Like, I've never bought treasuries and bonds, but I did. I have money in there now. Not a lot in comparison to the whole, but it's the only time that I've said, you know what, I'm willing to do this. So if they're willing to pull somebody that's never done it before, right? Then imagine all the bears. You know, they're definitely doing it. I personally call it egotistical, call it whatever you want, but I personally think that I can find better value in the public market than I can with these treasuries. Um, so, like I said, since October 2022, I am value hunting. I started with big tech back then, and I personally believe it's time to look elsewhere. I still think big tech will do well. I still am buying Microsoft and Google and Amazon. I'm buying all these companies. And if I had to pick two that I think will perform the best in 2024, I'm thinking Amazon and Google. Those are my picks. But I still think they'll do fine. But I think we can get, doubles instead of, 10, 15. And even if they do extremely well and they do a 20% return, I think we can get higher than that with looking under the surface. So what I want you guys to think about, and the way you start seeing the market, like, right. So like pull up any chart. Somebody give me a random ticker. Any random ticker, like a big name, not like I don't know, not like a small cap, low float Momo or whatever. But so let me see. All right, we'll do Google. So here's what I want you to think about Google. Okay, so everybody, if you can't see my Google chart, just look at your Google screen here. So what I'm going to do here, let's say you do not own any Google, okay? The price is 143.36, right? And if we're targeting a 12% return on Google, we need to finish the year up around 160.89, right? Is that doable? Do you guys think that's doable for this year? I think it's doable, yeah. But man, I think I don't know. If I'm trying to capture 12%, I might I might look elsewhere, right? Now let me ask you this. What if Google's down at 125? Well, now a 12% return just brings you back to 140. Would you guys be willing to buy Google at 125 and try to take it back to 140 for a 12% return? Put a 5 in chat if you'd be willing to buy Google at 125 to try to take it back to 140 and get your 12% return. Yeah, that looks great. You guys know what that's called? That's called valuation. Now, here's the thing. You guys are probably looking at price and you're like, oh, it's down. Well, it's at 143 now, so maybe. But what happens a lot of times is, guys, when stuff actually does that. So do you guys remember, like, I was buying the blood. Remember in October? I'm like, I'm buying. Right? This is what we look like. We're down here. Why was I buying so heavily down here? Everybody else is running for the hills, and I'm like, no, thank you. Yes, please, give me your money. I'll take all of it. Right? It's the idea of valuations. Right? Just bringing it back to highs is automatically 16%. Woo! Most people can't do that in a year. Yes, please, I'll take it. So when you start seeing pullbacks in these big companies, and what's a good one right now? What about Apple? Apple's in trouble, right? Apple's lowering prices. Apple's doing this. Apple's doing that. Well, guess what? We're down 8-9%. Apple's getting to a point for me where it's like, man, do I want to buy this before earnings? Right? You know what I mean? Like, the valuation side of it is becoming tempting. Right? And this is what drives the markets. Okay. Let me get back to the PowerPoint here. Any questions on this? So again, what I said at the beginning of the year, stop looking at price, start looking at value. Price is what you pay, value is what you get, right? If you go to a yard sale or that show on History Channel where they go out and they look for these things, these like buried treasures, and you like if I went to a yard sale and I found a Michael Jordan rookie card and they're asking $1 for it, you know what I mean? It's like they don't know what they have. Yeah, great, I'll buy it. Here, I'll be nice. I'll give you $5, and then I'll go sell it for a few thousand. Right? Yeah, pickers. Okay. So I showed you this cycle in the first presentation of the year, and you can see we have a lot of sectors that are still hated, guys. Like you can see a lot of sectors that are hated. And this is where I am bargain shopping, right? It's like me going into the garage sale looking for some bargain shopping. And so like I mentioned, asset class sentiment, look at real estate. Real estate, nobody wants it, right? So when I bought V&O, nobody wanted it. I still believe there's great opportunities here. I personally think, you need to look at it from a long-term perspective, not necessarily this month or next month. While we could, yeah, I think the overall 12 to 24 month span on some of these names are going to be extremely good. So again, you guys know I bought V&O, right? I'm completely out of V&O. I've distributed it all, and it was a great play. We got more than 100% out of this. We got the double. But one of them that I'm still currently in is CCI, right? And I'm willing to add to this. Again, I think we're going to get a double out of this. Maybe more. But this is just another one. And if you're not good with finding value in certain companies, if you want to buy just sectors, you can do that. Like VNQ is the Vanguard REIT ETF, right? And you can come in and you can click up here and it'll give you all the names that are in them. You can look through those. Another one that I think will do extremely well is American Tower Corp, right? But I went with CCI. Okay. Now, the other thing that I would encourage you guys to do, you need to do this with your trades. And if you're learning from somebody like Mr. Bear, me, Nate, you need to go back and you need to review what they were watching and why, and figure out if you can find it in the future, not like before it happens, not after it happens, right? So that was that. Now, let me talk a little bit about this week's ideas. First off, it's ChopX. For me, I'm trying Disney. I got in Disney. You living sweets? Oh, you okay?
Yeah, I think it's gonna make fun.
Love the sweets. So my idea of Disney here, I've gone over this a couple times, but I'll do it again. We've got this descending triangle breakdown, and I told you guys if we get a descending triangle breakdown and it holds, I think we're going to break to the upside. And that's exactly what we did. I'm sorry, we held. We haven't broken the upside yet, but that's what I'm targeting. And so I got in these last week. I told you guys about them. And so Disney is one of my main watches for the week. It's going to be a slower one, but it is one that I'm watching. ISRG, this one had good data last week and shot up. The data came out as preliminary data for the earnings report saying it was going to be good. Some bearish reversals that I'm looking at is Target, BAX, and PDD. Understand what a bearish reversal is for me is like a rev strat, right? And so if you look at the PDD chart, if you look at the Target chart, what you'll see is, let me show here. Let's do PDD is going to be a good one because what it allows is both. So here, so you see how this looks like it's a 2 up, right? And now it looks like maybe it wants to be weak and come down. So the thing about PDD is, well, if this doesn't trigger to the downside, or if it does a false trigger, if you see right here on my TTM squeezes, one of the TTM squeezes I'm watching is PDD, because this technically is still a beautiful, look at this, beautiful TTM squeeze chart. And so what happens a lot of times is I'm willing to play it either way. I'll play either one of them, right? Now GNRC had a nice 78, but it gapped down this morning. It was just big gap down this morning. So I'm gonna kind of wait on that one. But Google, this is one that just broke out and is now squeezing on smaller time frames, and it's an ICB. You know, we nailed this one this morning. Got in a little bit early, but anyway, this was beautiful play on this one. This is my inside candle weeklies here. So if you guys need that, just let me know. I can copy paste that in there. And then so PayPal has some stacked lower time frame squeezes. Over under is a main point of control here. We obviously gapped down and we're well underneath that. And so what I had to change this to on PayPal was an absorption play, right? Because we're gapping down out of this 60 area. And you know, the initial buy right out the gate is just to see if it wants to come up and gap close and use the pre-market low as risk. It stopped me out just real quick, and we caught the lows. And so we've already taken profits out of this. We're green on PayPal, and I've got the rest of this set in as a hard stop. So what this is an example of, guys, is being able to adjust to whatever the market gives you, right? So let's see if this one holds. The other thing that's happening, guys, is earnings seasons begins. You know, it's my favorite time of the year. What I want you guys to understand as a value player, you get 4 candles a year, right? Each candle is just your earnings report. As a value player, the price doesn't mean anything. Price going up and down and all that kind of stuff, it doesn't mean anything. But 4 times a year, we get these reports that we're like, let's see if these people are doing what they say they're going to do and what I think they're going to do. And so if you don't have access to this chart or this worksheet, just let me know, and I will share that with you. But this is going to be my main focus starting really this week into next week. Okay, let me catch up. Any questions from you guys? Man, look at this Apple bounce. Love it. Apple and Oracle. We talked about Tesla there. Yeah. Okay. So Amazon was another one. So I haven't looked at and or played Amazon's. Oh, okay, yeah. So Amazon's kind of broken down. So Amazon's just kind of a wait for me right now. Oracle, maybe we can get an inside day on this one. Okay.